Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. Yesterday was really, as I said today in Forex market report, this was really interesting sessions because we've got lots of statistics, and it is very interesting the performance during the statistics release of the euro currency and the gold market, because different traders on different markets look at the different data. So if on the euro currency investors were looking for mostly the inflation, which was higher than expected, on the gold market the majority were looking for gross domestic product number per se. It's just because slowdown of the economy suggests less pressure from the Fed on the interest rates, and we've got the negative gross domestic product, and that has triggered first an initial reaction, strong upside bounce, which actually gives a great opportunity for taking the position, because lately it has become the bearish grabber and market keep going lower. So currently on the daily chart, despite that we've got volatility recently, picture hasn't changed. So everything stands as it was. Everything goes with our trading plan, so we do not need to change anything. If you have the short position based on grabbers, just keep it, because market is coming finally to the target. Right above this target, we will not take any new short position by far, because we need to see how market responds on the free drive target. If we get straightforward downside collapse, and we definitely will see the signs that market is going to the 1760, and free drive will be erased on the hourly chart. In this case, yes, we could consider taking the new short position, but currently, meantime, we're focused on the target of the free drive as the target of this week, and see what will happen next, because investors also need some time to absorb and consider the numbers, make the investment decisions. So some more quiet session might be today, tomorrow. On the 4-hour time frame chart, take a look actually what has happened. This downward action, as numbers have been reported and will be more negative than suggested, gold has shown initially strong upward reaction, because it suggests that economy slowdown. It means that Fed will have some concerns and problems with the more rate hike. But this reaction was very short term, as high inflation numbers and just 2 times collapse on the consumption. So take a look, actually guys, I already shown it in the euro report, so you can see more negative gross domestic product, sales drop 2 times, real consumption spending drops 2 times, inflation is greater than expected. So this is terrible numbers for first quarter, and that explains that gold has returned back very fast. It's keeping dropping. So as a result, we've got bearish grabber. This grabber suggests taking out of these lows. That significantly increased chance that our free drive target at least will be completed. Maybe we will keep going lower, and probably we should keep going lower. But currently, we're watching for a nearer standing target, and this grabber is really big assistance to us with the suggestion of taking out of these lows. Another bearish moment here, guys. Take a look. Despite this strong upward action, market with this downside action has erased this ABCD pattern as price dropped below the C point. So we do not have this ABCD pattern anymore. Later on, you can see this minor bearish reversal bar has been formed. It's also just downside action, and here's very interesting performance. So actually, these 2 candles we also could treat as the two candles bearish grabber. So because here's trend has turned bullish, and right on the next bar, trend has turned bearish. Very often this combination works the same as a potentially bearish grabber. So on the hourly chart, that's actually the pattern that we're watching for. You can see reaction on the OP, which is interesting that this upward bounce on the gross domestic product release started right precisely when OP, it's around 1812, has been reached. OP has been reached, strong upward bounce, but take a look, this bounce still remain inside of this range. So this spike it's not broken the overall body of this channel. And downside action is false. Currently, since our next target stands around 18 or 18 or 9, it's very close to the current price action. I do not see, well, first, for taking the long position, it's too early, because you need to wait and see when the market completes the free drive, and then you could think about taking the long position. For taking short positions, probably seems to be too late. It's just because where you place your stop above this area, but this risk is significantly greater than the destination to the target. So if you will find some more or less acceptable placement for position taking, where to give you the risk-reward ratio around 1-to-1 at least, well, you could think about it. But in general, we're just waiting for completion of our bearish pattern, completion of the mentioned target, and then we will see what will happen next.